All right, what's up, Even I Can Traders? Back once again. Just had some extra things I wanted to share based on that last video with TexTrading, where he had some issues with spread trading, and I kind of refuted some of those. And I wanted to show you, based on some trades that I just did today, what a better way to trade spreads is and some things to keep in mind, because the day, based on his example, was kind of shaping up to be similar to his example, where we had a big drop in the morning and then a big recovery and all that kind of stuff. And I wanted to show you how I would have traded that day, or some things that I looked out for when I placed my trades today, to make your trading more efficient and safer than just pop and open a trade right at the open and hoping for the best. So first thing that I think that, or I teach that you need to set up, is some indicators. I want to have at least 2 or 3 different indicators or things that are triggering a trade before I place a trade. One of my favorite ones is going to be the stochastics indicator. It's an indicator of kind of momentum in the market, and it helps you position where a good area to get in or get out of a trade is. Second thing, pivot points. This is a very good indicator of support and resistance areas. You can see these horizontal green lines and red lines right here. These are the pivot points for today. And the third thing for me usually is just the price action itself, and I'll explain that in just a moment. So on the open today, I saw, the market was kind of faltering and dropping and everything like that. We were heading straight into a support area at this pivot point right here. So this is a good area that I like to start looking to trade, not to trade specifically, but this is where I'm going to start taking a look. If the market is getting close to one of these pivot points, the market is likely to start reversing, or at least pause momentum. So what I saw as it approached this area of support here, if you look down at the stochastics, you can see the stochastics is below the 20 line. Now, if you know how to read the stochastics, when it's below the 20 line, the market is in oversold territory. So what I used to do when I first started trading is I used to place a trade once it entered oversold territory. But what the market can do, it can hang out in overbought and oversold territory for a while. So you don't want to trade upon the entry, or if it's just playing around below the overbought or oversold territory. You can have something like this day right here, where it started out in oversold territory and it just hung out there for most of the day before it decided to go back up. That's a trap you don't want to be in. So now what I do is I'll wait for it to enter back into the middle zone, but I won't trade just because it enters into the middle zone. I'm looking for some enthusiasm, some enthusiastic bars, some long green bars going back up to give me the confidence to get to say, okay, now I can trade below this area, right? So what I had here is I had an entry back into the middle zone of the stochastics, and I had a long green bar. So I placed a trade on this bar for a put somewhere down in the 3700s. I forget exactly where. I think it was like 3780 or something. Placed a trade right there. The market went back up and hung out. And then I saw another opportunity to place a call spread this time, right? Still early in the day. So around this area, I saw the market starting to fall back into the zone, right? In the middle zone. So it wasn't until I saw this red bar right here that I actually considered placing the trade. Now, the market did not continue to go down, but that's okay for spread trading, because I placed my trade above this resistance line. I think this is R2 right here. So I've got two bands of pivot point resistance above me in my trade. And I've got a market that looks like it's relaxing into the day based on this longer red bar right here. And you can see what happened at the rest of the day. The market kind of bounced back up into a higher area, but no enthusiasm as far as that's concerned. It looks like the market just kind of relaxed, right? So I ended up having, I traded into an iron condor that's about 100 points wide, but I only did that based on the price action and the evidence that was presented to me at the time. With stop loss is set, so I know at what points that I don't want the market to go where I'm going to go ahead and consider exiting. And it's going to be, it would have been if the market had continued to start peaking above this first pivot point right here, then I'm going to look at going ahead and taking an exit and taking an L on my call spread. And here as well, if the market had started to dip significantly below this pivot point, then I would have considered taking an L on my put spread down here. But didn't have to do that, right? So again, if I were to trade, if I were to buy calls or buy puts and try to take advantage of price action for today, there's really not much here, right? So I would have probably bought my call right here, and I would have gotten maybe a bar or two of action out of it. And who knows, I might have tried to sell it after the market went back down again and really gained nothing or even lost a little bit, because you have to overcome that time premium just to make a profit. And if I bought a put, I really would have been out of luck, because I would have bought it on this second long bar and it really went nowhere. I would have had to wait until this far in the day to even have a chance at getting anything. And by this time premium has eaten away, has decayed away from my option, eating up all of my potential profits. So on a day like today, where the only real way to make money is to buy a put right at the open, or just know somehow to buy a call right at the low point of the day early, those really are your only 2 points to make money day trading puts, calls, or stock on this particular position right here, where with options, I'm cruising, not worried about a thing right now. So just to follow up with that video, this is kind of why I advocate selling put spreads and call spreads on 0 DTE, because this is going to be, I believe it's 35 cents against $5. So that's, what's that? It's about 8%, 7% or something like that on my money in just a few hours of trading with not that much stress. I recorded that video while this trade was going on, the video prior to this. So it not very much stress. I'm not glued to the screen. I'm not like, oh my God, I have to sell at a specific point or anything like that. I've got my alerts set. I've got my stop losses set. And I'm kind of cruising. So it's not just about things like, return on your money and risk reward ratio and stuff like that. It's also about lifestyle. It's about stress. We're trying to do this while we're working, while we have jobs, while we're trying to do other stuff. We have families. We're cooking in the kitchen. We have to go to the store. We have to wash clothes. We got to clean. We got to do other stuff. And if you're trading by buying calls and buying puts, you have to be glued to that screen just in case the market moves against you, because those things move fast. He talked about how fast gamma risk moves. Try that delta in a live call trade. Try that. When the market shoots down 5 points out of nowhere and takes away 90% of your profits in 2 seconds. Try that stress, right? You have to be glued to that screen. You have to be glued to your phone, whatever you're using to trade. And while your trade is on, you can't be doing anything else. But with a call spread or a put spread, you put the thing on, set your alerts, and go do something else, right? You know, if that alert, you set your alert maybe 5-10 points away from your tolerance zone or something like that, where you want to set your stop loss. Like, let's say my trade is at 38.77 right here. So what I'm going to do is I'm going to mentally say I'm not gonna put a physical stop loss on the trade for specific reasons, though. You know, the market can have some weird prints and take out your trade. So I don't like to set physical market order stop losses, but I'll set a mental stop loss, right? Say at this bar, right behind this bar, right? So if the market gets here, I'm going to place an order to exit the trade. Then what I'm going to do is I'm going to set an alert right here. So if this alert goes off, I know to look at the market, because I'm not even looking at the market by that point. If the market gets up here, beep, 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 my phone goes off, my Apple Watch goes off. Okay, now I'm alerted to go look at the market, get everything, take a look and see what's going on. And then if the market continues up here, then I'm already ready to place my order to close out the trade before it starts to get bad. And then I come back tomorrow and do it again. I might lose 50 bucks. I might lose 40 bucks. I might lose 70 bucks. Okay. But guess what? It only takes me 3 or 4 days to get that back, because I get that back 9 times out of 10, 95% of the time. Right. And I've increased those odds. I've further increased those odds because I don't place it right at a dumb point, at just any old point. I wait for a market inflection and then go above that market inflection and then place my trade. So that 95% probability of profit has then further increased because the market has already exhausted a move, right? The chances of it continuing that move that it's already gone up and got tired of is lower than if I place the trade way down here and it's just starting a move, right? So this is the game. That's why we trade this way. Okay. That's why we do what we do. If you trade like that, if you use your indicators, if you don't just dumb trade and say 95% sounds good enough for me, plop, and then actually wait for the market to make its moves, then trade based on those moves when you can see the market getting tired, when you see the market made its move and wants to do something else now, and then you place your trades away from the market, you're going to increase your trade, you're going to decrease your stress, you're going to have better outcomes, and you're going to be able to do other stuff while you trade instead of sitting there being glued to the screen, worried about 10 to 1 risk reward ratios and stuff like that, right? All I did, plop, wait for this, look at that green bar, connect that to the stochastics looking like I wanted to, looked at my pivot points, plop, move on. Takes about 5 seconds to place the trade. Oh, another opportunity popped up. Confirm this bar, looks good, confirm that bar, looks good, trade, plop, move on with the day. That's it, right? So I make it sound easy. I make it sound all that kind of stuff. There's a lot that goes into learning this thing in that kind of depth. But once you have it down pat, then you can just plop or move on. Wait till tomorrow. It's almost boring. It's almost boring, right? And it should be boring. That's how you make real money. Real money is kind of boring to make. Look at Elon Musk. He can't even keep himself together because he don't know what to do with himself, right? Making money should be boring. That's how you make wealth. It's got to be boring, right? If it's exciting, if your heart is pumping, if it's all that, it's probably too risky, right? So that's why this, in my opinion, is some of the best types of trading, just because it fits your life so well, because it is easy and it's profitable and it's repeatable and it's scalable, right? So that's all I wanted to say as a follow-up. Thanks for sticking with me. Please subscribe and like the video. Leave some comments down below. Let me know if you agree with me, disagree with me. I'm fully open to be wrong, fully open to debate about it. I don't think that I have all the answers. Again, there's so many different ways to trade in the market. Every trade has a possibility of making money. This is just the niche that I found and I can defend and I can stand behind it so far. If new evidence comes up to the contrary, open to it, and let's go with the easier way than what I'm doing, right? Let me know. All right. Thanks, guys. Even I could trade. We out.